So getting into, we've talked, about defining ministers and clergy, talked about their income, talked about the all-important housing allowance. There is some subtle differences in their expenses as well. So if we look at their expenses, there's ways that those can be handled. We have to say, okay, what if the church pays the minister's expenses as an allowance? Or do they pay them directly as a non-accountable plan? Then all those amounts are going to be taxable and added into that W-2. There is certainly a better way to handle it, because if the church is paying their expenses for them or giving them just a plain old allowance, it's going to be subject to both federal income tax and self-employment taxes. Here's where things are a little different. Now, prior to 2018 in our new tax reform, the minister could deduct those expenses. So they get them added into income and they turn around and deduct those proper expenses on a 2106. That certainly has changed dramatically because we can't do the 2106 anymore. And that is where it used to be subject to the 2% miscellaneous itemized deduction. Since that's gone away, it becomes taxable and they can't deduct those expenses all the way at current tax reform law from 2018 all the way through 2025. So, okay, and a little side note as well, those expenses are not deductible for AMT purposes. Because of that, now we can't deduct those expenses. What if the church pays the minister's expenses, but it's done as an accountable plan? Accountable plan does mean it has to be a written plan, and the reimbursements on that plan are then free of all tax. No self-employment tax, no income taxes on it, and then you don't have to worry about, turning around and deducting them as a 2106 type of expenses. Because normally, in the past, if you had excess expenses above what they're reimbursing you for in an accountable plan, you could deduct them. But again, that has gone. It has changed from 2018 through 2025. We don't have that 2106 expense availability. So if they do an accountable plan, they are reporting, and it's a written plan, they're reporting the expenses properly, they're getting reimbursed for it. It takes care of the taxable aspect of it. No income tax, no self-employment tax. And really, this is the very best way to go about it. So it requires some wise planning, especially now, because before, we can just deduct it. No, not anymore. So really, my recommendation, any of those proper expenses should be reimbursed through an accountable plan, most especially from 2018 forward. But remember, it has to be written. It has to be done in a proper fashion. So what about different types of expenses? Let's look at what expenses might occur for ministers. Well, let's look at a common one might be office use of home. Well, not really. That's going to be considered unlikely because churches often provide offices at the church itself. So the other catch, your total home cost is already included in the housing allowance exemption calculations. You have to be very careful venturing into the area of office and home deductions when it comes to ministerial clergy. What about special clothing or vestments? They cannot be streetwear or everyday wear, so they can't say, well, I have to get the suit. Well, no, unfortunately not. No matter how nice they are, that doesn't qualify because they can be streetwear or everyday wear. It has to be specific to ministerial services. And if it is, then it would be able to be allowed either in a accountable plan, which is definitely the way you're going to want to go now, or if they have that other income where they have to put it on a Schedule C and they deduct specific things related to it. Transportation costs. What about those? Well, certainly transportation costs would be deductible, and it might include different types of trips when you think about what capacity they're doing, maybe hospital or nursing home visits. Maybe they're attending conferences or performing other church business, then transportation costs would be. But the non-deductible portion of transportation would be trips to and from church, just like, commuting expenses for any other worker wouldn't be included. Travel away from home, well, that's the same rules that apply for meals and entertainment and lodging, just like any other taxpayer. And now that we, again, had some changes in our meals and entertainment rules, and that it's still going to be the same as any other taxpayer. So just kind of follow along those rules for the ministers and clergy. What about dues? Certainly, we may have some dues and subscription costs in there, and they could be deductible if they're annual fees to maintain credentials. These are just some ideas of how it may be an expense that affects your pastor and clergy members. What about contributions to their church? Well, they're deducted as charitable contributions. The trick of that is they want to sometimes deduct it as a business expense because they may argue, well, they're expected to donate part of their income back to the church, so therefore it's a business expense, and it is not. It is treated as a charitable contribution, so it would be flowing through to your Schedule A, and if they can't itemize, then they don't get that deduction. There is, and we deal with expenses, something called the Deason rule. So we kind of got a handle on maybe a few of the unique different ways that the expenses may be directly related to our pastors and clergy. But the Deason rule is specific that says if a minister is receiving some sort of a tax-free housing allowance, then we have to allocate our expenses between the Schedule A and the Schedule C. Because maybe they also have, we talked about if they earn some money on the side from maybe weddings or funerals or those other things, and they have a Schedule C, we have to allocate expenses between the Schedule A and Schedule C. It's actually required for income tax purposes. Now, this does not affect any of the deduction at all whatsoever for self-employment tax purposes. We're going about these rules just for the income tax purpose aspect of it. So, what is the formula? The formula is that we take the exempt housing allowance, which is, so I'm trying to make this just a little bit simpler if we can. I'm going to see if we can give you some examples here in just a second here. Exempt housing allowance is the exclusion percentage to total ministry income. So what is that total income? Let's just start with something basic there. It's all W-2. It's your net Schedule C. It's your housing allowance. Church paid FICA and AIR if they happen to do that, and any expenses reimbursed under that non-accountable plan. So again, here's where I'm stressing accountable plans are the way to go. But all these combined together, that's your total ministry income. Next, I'm going to give you some example right here. So let's see if we can make this a little bit easier. So your exempt housing allowance divided by your total ministry income, that's going to be that exclusion percentage. So let's go back to let's say Reverend Jones has a salary of $55,000 and has a car allowance that's non-accountable of $5,000 of that, and a tax-exempt housing allowance of $20,000. So what would that look like? So we're going to go through and say, I don't know if you have anything to jot some of these numbers down. If not, then I'm just going to kind of go through them here. He has some truly allowable expenses, has auto expense, some investments, dues, maybe all together we're going to make it an even number. His total expenses is $6,000. So how we do that is we're really comparing the housing allowance. It's a percentage to try to figure out how much is non-taxable housing allowance versus all income, so you know what percentage you're supposed to basically carve out in the deductions. So our housing allowance of $20,000, we're going to take that and divide by his total income. So total income, that's his salary, and it's the Schedule C income. It's his housing allowance dumped in there. It's everything. So total ministry income, if it's $80,000 and his housing allowance is $20,000, I try to make that a simple percentage. 25% is that exclusion percentage. So how does that work? I told you a moment ago, I just made an even number. His total expenses is $6,000. We have to multiply that by 25% or carve out 25% of the total expenses. So $1,500 is how much we have to carve out. That means even though he has truly $6,000 of deductions, we got to carve out $1,500 of that. So he only gets $4,500 of deduction because we have to equally allow for the fact that some of that is already non-taxable. They're not going to let you take 100% of all the deductions is the idea of the Deason rule. Here is an area that I do find a lot of preparers will do incorrectly, unfortunately, because they don't know this rule exists. They will go ahead and maybe do the housing allowance correctly, but then turn around and count 100% of the deductions, which is incorrect. You've got to carve out some of that. So what you're supposed to also do is it's required that you're supposed to attach that to return. If you receive that tax-free housing allowance and you have some deductible ministerial expenses, then this is the required statement you have to put in there. It's basically that formula that I gave you real quick via audio. You're going to go through and you're going to list it out on the return and attach it. So you're going to talk about each income type. You're going to look at each non-taxable income type, look at your deductions, and then you calculate the non-deductible portion or that carve-out portion, and you list it on a statement. So all this is going to be listed as a required statement that you're going to attach to that return. So Most of the expenses for ministers and clergy are pretty straightforward, logically thinking about it, but this is the one that will catch people by surprise because they don't know the decent rule exists. And it's just, to boil it down to a simple thought, is taking and carving out at a allocable percentage, saying, okay, I get it, my total income's this, and some of that's non-taxable, so I'm going to carve out that much expense. That's in essence what the decent rule is. So the last little thought as it relates to ministers, we did go ahead and define it. We talked about income. We talked about the nuances of the actual housing allowance, and certainly some definite little nuances in expenses themselves. But the one aspect we just need to cover last is they can possibly have an exemption from self-employment tax. I know I've been talking about all along how self-employment tax is prevalent for ministers and clergy. There is where you can exempt from it. They can be exempt. They can elect an exemption from self-employment if they are a member of a religious order that has taken a vow of poverty, or it's based on opposition to receiving Social Security benefits due to their religious principles. So that's the premise of being able to get the exemption from it. It is obtained by filing a Form 4361, and the due date of it is the second year they have received some sort of self-employment taxable income. Now, that includes W-2 income because it is subject to self-employment tax. So year number one, they get some W-2 income for services as a minister or clergy. That's year one. The due date is the second year. So they have to decide this pretty early on. They can't be, 10 years in and then decide they want to get a self-employment tax exemption. The 2 years do not have to be consecutive, so maybe they had a little bit in 1 year and then they don't do anything for 5 years. That's okay. But in that second year, that's the due date. So the original 4361, and you have to have 2 full copies sent. It goes to the Internal Revenue Service in Philadelphia. So we have in the slides here, the address. What they're going to do is they're going to contact that taxpayer, that clergy or minister member, and they're going to contact them by letter and say, okay, I know you applied for this, but we're going to make sure under penalties of perjury that you understand this election. If that's the case, then they get an approval form, approved form 4361. They have to permanently retain this because that's going to be their only copy they ever get. So they're going to keep that because that's their proof in the future of the exemption for that self-employment tax. Now, non-ministerial sources of income is still going to be subject to self-employment tax if it applies. It's not an all-blanket, no self-employment tax ever stamp. It is just as it relates to the minister or clergy services. So let's say they work in a carpentry business on the side and it's subject to self-employment tax. That is not exempt. Only the exemption only follows the minister and clergy income. What you do on the 1040, you're going to write exempt Form 4361 on the employment tax line for the portion that would be related to that. This election is irrevocable completely. So here is, what can happen and what is possible. You have a pastor member that does this way early on and they're getting close to retirement. Well, now they're kind of wishing they had these Social Security benefits. So this is just something to keep in mind. Yes, it exists, but we'd have to make sure that it really is in their best benefit and they meet those requirements. So it's letting you know this is how it works. But in closing, one of the thoughts that I want to give you overall as we're dealing with the churches and the pastor and the clergy members, think of planning and consulting opportunities that you could offer churches, and especially ministers, for doing things properly. This is a little complex for them. This is definitely an open opportunity for you. If you become familiar and comfortable with this, you can provide them a very valuable service, especially with things potentially changing in the future. Something simple as providing them proper tax planning and return preparation, helping them set up accountable business expense reimbursement plans, doing proper housing allowance designations ahead of time. You can end up saving them so much more than your fees to provide that assistance. So those are some recommendations on how you can definitely help your ministers, your clergy members, your churches, all these folks that are affected by these rules. So that's what I'm going to leave you with. I wanted to thank you so much for attending this session, and I'm going to turn it back over to Jeff.
Perfect. Thank you so much for attending and taking the time. We hope you've learned some new things today. On this last slide, you can see there's some information of how to get a hold of Tanya if you have other questions. Also some resources to get into the Canopy community. Check out the other courses that we have. We hope you'll give them all a shot, and we appreciate you taking the time, and we'll look forward to seeing you on a future course.